Hey guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to be taking a quick look at crude oil prices because they continue to surge basically, and it is a big focus for the markets right now. So let's jump straight into having a look at the chart. I've got WTI here, front month futures. These are one-day candlesticks, and as you can see, we've recently, in the last 2 days, broken above a key area of resistance. You can see we had the high of the previous high of the year from back in July. That was, in the 70s, somewhere around $76, $77. We then tested that high on the 28th of September, but were unable to break above it. But since the start of the week, we've really had a surge of impetus to the upside. Mainly, this most recent leg higher is mainly as a result of the outcome of the latest OPEC Plus meeting. Now, one of the other reasons that crude oil has been moving higher in recent weeks is we've been seeing this global energy crunch where renewable energy resources haven't been producing as much as hoped. Natural gas prices have been absolutely surging, coal prices have been surging, and when energy prices in general are moving up, that does have an impact on crude oil. That partially helped crude oil break above this downtrend that it was in July and in August, and has lifted it all the way back up from under $70 per barrel to near $80 per barrel now. And because of this global energy crunch, some had been hoping that OPEC were gonna increase output in November a little bit more than what they had been previously saying. So OPEC has been saying for the last couple of months, we're going to increase output by 400,000 barrels per day incrementally each month, and until we've basically we're producing to our full output. Some had been hoping that they were going to bring that forward by 1 month and actually do an 800,000 barrel per day increase in output from November, but they didn't. They disappointed those expectations basically, and obviously restricting supply, you see prices go up, and that's what we're seeing. So we can zoom out a bit now. You can see this range that sort of had been in play between May, we hit that bottom there, then we went up, July hit that high, hit the low again. It was like a double bottom with the May low. That was in the end of August. Now we've broken to the north of that range, so you have to go way back because crude oil right now is actually at its highest levels in over 6 years, so we're going to have to go quite a long way back. And you can see the next area of resistance that I'm sort of, just technically speaking, looking at is an area of support turned resistance, as you can see here, and this is from 2015 basically, 2014, sorry, the end of 2014, October and November. Above that, once you get above that, it's kind of clear air, really. I mean, I guess the next key area of resistance, if you get above that, would be the psychological 90 level, which does, to be fair, coincide with a couple of lows here. But really, the area you want to look at is this area that was support for a couple of years back in 2013, then in early 2014, and then in sort of September 2014, we broke below it. That's around $91 per barrel. So technically speaking, you have to go all the way back. All of the moving averages, they're pointing higher. We've been breaking these key levels. Things are looking pretty bullish for oil. From the fundamental side, with OPEC refusing to bring back supply as quickly as the market wants, with Iran still restricted by the US because negotiations towards a return to the nuclear deal haven't gone anywhere yet, you're still looking at global oil markets being undersupplied for at least, the next couple of months, the next six or potentially even more months. So that is supporting prices. But yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.